Good day, everybody. Welcome. Today, I'm going to be just chatting to you about the signing of documents in terms of insurance in sectional title. So there are quite a few areas where signing of documents pertaining to insurance is important. Things like your annual record of advice when you're acknowledging and things like that. But there are three areas where it is particularly important. And I'm just going to cover the three areas. I'm not going to drill down into the subject matter. I'm just going to tell you about them where it's important. So first of all, know that it's pretty important when it comes to appointing your broker. So when you're appointing your broker and you are putting it in writing, I always recommend don't leave it to your managing agent to sign that one off. Make sure that you have two signatures, your two trustees, or one trustee and the managing agent in terms of Prescribed Management Rule 10. Okay, so Prescribed Management Rule 10, I'm going to put it up here. It sets out the way to make any signed document legal in terms of sectional title. Two signatures, one signature of the trustee and the managing agent, and always supported by a resolution. Okay, there we have it. Obviously, we as brokers, we only look for those two signatures. The second area that we think it's important is when you're signing off a claim. Okay, you notice I didn't use the word claim form because in many times you might be doing it via a link, and of course you can authorize things via links as well. And as long as these documents are getting to the right place. But certainly in the traditional claim form, a claim form or claim needs to be signed off by two trustees or one trustee and the managing agent to make that important form legal. A claim form is a legal claim. You're claiming contractually. So it's the other part of the contract of insurance. You're now making your claim legally. The body corporate is the insured. I'm not going to go into that either. But in terms of the Sectional Titles Act, Sectional Title Scheme Management Act, more specifically, it's a known fact that the body corporate is the insured party and therefore it needs to be correctly signed. Let that claim form land up in court incorrectly signed. We don't want to go there. Okay, so signing off on the claim form, Prescribed Management Rule 10, apply your mind. Then the second, and I say apply your mind because it's just more important when you have an iffy claim that could go legal. Okay, then the third scenario is when you're actually signing off, when that claim has gone through and now you have an agreement of loss. Say the insurance company has elected to pay you out in cash and they're going to have you sign an agreement of loss. Especially if it's an owner section, of course, let the owner sign, but don't let the owner sign alone. Just make sure that two trustees or one trustee and the managing agent co-sign to make sure that agreement of loss is legal and binding. And of course, in case there's no comebacks later, make sure, of course, that the money gets paid to the body corporate's bank account as a primary or starting point. It can always get paid out elsewhere afterwards, but initially make sure that it goes to the body corporate's bank account. Okay, so those are the three areas. And again, please ask you, support us, like these videos, share, and subscribe. We really love your subscriptions. We want to boost our subscription base. And of course, we don't want to just boost it with anybody. We prefer trustees, managing agents, and interested parties to be subscribed. We want to get these messages out to all of the right people. And yeah, look forward to your further support. Thanks very much.